Let's take a look at Tesla did today, one full day after the earnings that happened yesterday. Earnings which were not super good in terms of the expectations from the analysts. So Tesla missed on the earnings, a 5% miss. Tesla also missed on the revenues, 1.5 billion less. This is partly because even though Tesla sold 30,000 more cars or so, they sold them at an average selling price that was much lower. So this did not help Tesla with the revenue. But let's take a look at the stock chart. The fundamental data is one thing, and what buyers and sellers are thinking is another thing. Also, Tesla yesterday mentioned a lot of things about what is going to happen in 2025, 2026, 2027, and 2028. And we know that growth stocks really like the story. If you have a good story, even though you maybe had not the best quarter in the world, even though it was not that bad, then things can still move up. This is why we need technical analysis. If we only look at the news and the fundamental data, we are missing the picture. We are missing the complete picture because people can buy and sell, even though we have great earnings, and we have many examples. In 2022, this is pretty clear. We had some great earnings, but Tesla was still plunging. It's not the news that we are buying. We are buying the stock price. We are buying the stock. And what moves a stock is not the news. It's not the data. It's not the analysis. It's the buyers and sellers that decide to buy and sell. That's it. So Tesla, we closed up $11.18, 2.87%, closed at $428 post-market. We seem to be up by 21 more cents. So let's look at what we have here on the chart. Let's go on the 1 hour chart to tell you why I put another support at 384.27. On the 1 hour chart, based on what happened yesterday, we see that the stock clearly made a lower support than 388.73. This is why we have this new one again at 384.27. This is something that developed yesterday, but it was in line, it was in line with what happened January 10th. So it's always nice to see that things repeat themselves. If it happens once, we cannot really draw a line each time we have a new low, because even though people think I have many lines, I would have way more if I was doing a line per low. But once we have a low at the same level twice, then this is becoming more significant. So 384.27 is the new low that we need to watch on the 1 hour chart. And as one of my members in the Discord channel, we had Stochastic over 60 most of the day. We are having a little bit of a dip today, but we had Stochastic over 60 on the 1 hour chart. This is always nice to see. So basically, Tesla opened quite high today. We opened at 410. So Elon said many nice things yesterday, which are very exciting. I'm working on a video to explain all of that. But we opened quite high at 410. We had a big move down, but things are now recovering. On the second hour, the low of the second hour is at 388.73. The low of the first hour was at 384.27. And we went as high as, that's pretty good. Now we have a little bit of a drop last hour. Let's go back on the daily chart. We are still above our support line right here, and we are still below our resistance line right here. So the pattern has not changed. We are supposed to be zigzagging between these two lines, and this is exactly what we are doing. What we need to watch is when we are going to get outside of this line right here. So once we close outside of it, which might happen within a few days or within a week or two at the most, then this is going to be a step change. It's going to tell us that, okay, we are no longer going down, but we could be going sideways. Then we need to check, when are we going to stop going sideways? We are going to stop going sideways when we break this resistance at 426.47. So this is the numbers you need to remember. Tesla is going to give us a buy signal when it breaks above 426.47. Join back here. We are going to check every single day I don't know when it is going to happen, but we check it every single day and we are going to see it the day it happens. The second number we need to check is 384.27, because if we go lower than that number, then this is going to mean that we are no longer going up, we are continuing down. And this is going to be a signal for us to start selling. In terms of stochastic over 60, we don't have stochastic over 60. We need stochastic over 60 for any move up to be sustainable. Look at any stock. This one. This is Sandal. Look at stochastic over 60. Every time you have stochastic over 60, a 21-day stochastic, boom. Over 60, boom. Stochastic over 60, boom. You know, everywhere, even here, boom. So if you don't have stochastic over 60, be careful because things should be falling down. We can look at it everywhere. So this is not the only thing that we are watching, but this is a very important thing that we are watching. So right now, we don't have stochastic over 60 on the daily chart. So one candle equals 1 day. We don't have it. Aside from the nice move we had today, which gave us stochastic over 60 for most of the day. On the daily chart, Tesla is not yet ready to be bought. So we need to close above 426.47. We need to have stochastic over 60. Once we have that, then this is going to be a pretty valid signal for a high probability entry. You can buy Tesla right now and hold it until 2030, and most likely you should be okay. But it does not guarantee that we might not go down first and then recover. So if you buy right now, you might be fine and Tesla might be launching eventually directly, but Tesla might also go down a while before going up higher. So in order to optimize your time in the market, why just go into the market when we have a little bit of a downward trend that's in play right here? We have two things at play. We have a downward trend and we have a bullish trend. We have two trends at play. So why go into the market when we have a bearish trend that is still active? Why not wait until it stops going down so that we can really ride it and that it is really ready to be ridden? This is the concept of this channel. This is our philosophy. In 2022, Tesla was not a good place to be in. We had nice little runs. So this is fine. We cut those runs. We cut most of those runs. But overall, it was going down. So after getting a run, we would sell and keep our money. Buying and holding is fine. This is less work, of course. It's less work, but you need to recuperate what you lost on paper. At the end of 2021, was worth $400 and it went down to $100. So your value was divided by 4. If you had sold and kept your money, let Tesla go down and get back in later, you would not have had to recuperate. We accumulate, we get out so that we don't have to recuperate. If a stock goes from $400 to $100, it needs to do a 4x to get back to where it was. And this took 3 years. So your money was sitting there for 3 years doing nothing. Instead of just getting out, finding another stock to get in, and then get back in when Tesla was ready. Let's take a look at the rest of the market. So VIX continuing down. We love this. When VIX is going down, stock market tends to go up. So VIX is down 0.72. We love this. Bonds is also trying to break lower than support at 4.5%. No stochastic. This one should be going down. Look at Dow Jones still into our bullish channel. So this is really nice. S&P 500 also above support right here. We were into a downward trend like Tesla. We broke it. And now looks like we want to continue. We have stochastic over 60. We should be continuing. NASDAQ, we have stochastic over 60. We had a bad Monday. Everybody had a bad Monday, but we seem to be recovering pretty good. And in terms of the small caps, okay, this is something new. This is exactly why we check our things every single time there's a new candle. On the daily chart, we check it every day. On the 1 hour chart, we need to check it every hour. So here, checking it every day, we see that, okay, we were into a downward trend. This was the downward trend, and we could not break above. Here, we were trying really hard right on it, but here, boom, we have a nice break. This is an indication that small caps want to make a comeback. So the first criterion has been achieved. We are outside of the downward channel. Then we need to check if we could get stuck under a congestion zone. So the congestion zone, because we came outside here, this is where I'm going to put the congestion zone at 23.25. So we need to break that in order to have a move. We already have stochastic over 60. So maybe very soon, it's going to be a good idea to get back into the small caps. Let's look at the rest of the market. So this is looking pretty good. We have lots of green, lots of green. Microsoft did not do so well. Let's take a look at this for fun. Wow, Microsoft, look at the move down. Let's look at the earnings that it had yesterday. Look at this. 3.89% positive surprise and 1.11% positive surprise in revenues. The stock is tanking. So this is why we still need technical analysis to prevent us from entering something that has not shown to us that it's ready to move up. Thanks very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.